The final hour of the trading session isn't just noise. It is when institutions cast their final votes, often revealing the true direction for the next day's open. Most day traders lose money in the final hour because they treat it like the midday grind. They fail to realize that the market structure shifts fundamentally at 3 p.m. In the Al Brooks methodology, the final hour is the truth phase. It clarifies who won the day, the bulls or the bears, and sets the stage for the overnight session. We must categorize the day before entering the final hour. Is it a strong trend day or a trading range day? Your strategy must invert entirely based on this single observation. On a strong trend from the open, the final hour often sees an acceleration. Institutions that waited for a pullback all day finally panic buy into the close. This creates a spike channel. If you see price accelerating away from the moving average late in the day, do not short it. This is capitulation by the bears. Conversely, in a trading range day, the final hour is notorious for false breakouts. The market seeks liquidity at the edges but lacks the energy to sustain a move. If the day has been sideways for 4 hours, a sudden spike at 3:30 p.m. is usually a trap. Smart money is fading this move, betting on a reversion to the mean. Let's examine the 3 p.m. reversal phenomenon. Often, a trend will pause or pull back slightly right before the final hour begins. This pause is profit-taking by early day traders. Once they exit, the institutions step back in to push the price toward the daily extreme. A critical concept is the climax versus the measuring gap. We need to know if a late move is exhaustion or the start of a new leg. If the price bars become enormous, 2 or 3 times the average size, right at support or resistance, suspect a climax. This is often the low or high of the day. However, if the breakout bars are moderate and close on their extremes with no tails, the market is telling you it wants to go higher overnight. This brings us to the market on close, or MOC imbalances. Large funds must execute orders by the bell, creating predictable pressure. If the market has trended up all day, buy imbalances usually dominate the close. Funds are forced to buy, regardless of price, to track their benchmarks. This leads to the most common swing trading setup, the buy-the-close strategy. But you must be selective. You only hold overnight if the final 30 minutes show, always in directionality. The bars must clearly indicate one side is in control. When the market closes on its high, there is a 60% probability of a gap up or follow-through buying in the first hour of the next day. But be warned, if the final hour was a trading range, the probability of a gap is 50/50. In that case, cash is the best position. Watch for the magnet effect. Price is often drawn to round numbers or the day's open /high/low in the final minutes. If price is near the day's high at 3:45 p.m., the magnet effect will likely pull it to break that high before the bell rings. Traders can scalp this. Enter on the pullback at 3:40 p.m., aiming for a test of the magnet level at 3:55 p.m. However, once the magnet is touched, liquidity dries up. Do not greedily hold for a breakout beyond the magnet in the last 2 minutes. Let's discuss the surprise bar close. Sometimes, a massive bar appears in the opposite direction in the last 5 minutes. This is usually institutional profit-taking or portfolio rebalancing, not necessarily a reversal of the major trend. Do not panic trade the open based on this. To summarize the final hour logic, identify the day type. If trending, look for acceleration. If ranging, fade the breakouts. For swing positions, look for consecutive strong closes. If the market is hesitant or doji heavy at 3:55 p.m., exit and sleep well. Remember, the end of the day is when the amateurs are exhausted and the professionals are executing. Align yourself with the professionals. Mastering the last hour allows you to capture the day's expansion and position yourself correctly for the next morning's gap. Watch the close, trust the volume, and manage your risk.